All right, so I'll hand over to Deji and Khalid now. So I'll be in charge of this slide. Thank you.
Good evening, everyone. My name is Anibaba Deji, and here we'll be presenting a project proposal to everyone present. So the name of our project is Stock Market Price Prediction, and we'll be looking into the outlines. We'll be talking about the project overview, the project objectives. We'll try to understand the problems, and we'll try to understand the stock market. We want you to understand how the stock market works, and talk about our target audiences and competitions, about how we got our data, the market trends, and up to the model we used and which we found suitable for deployment for product use. And yeah, can you slide in? So onto the overview. The reward stock market brings to investors who know how to read it right or enormous, while its penalties can be grievous to those who are ignorant, careless, and unlucky. In that case, nevertheless, investors are faced with problem of knowing the right stock to buy or when to buy it. As a result, we have come to recommend a machine learning model that best suits and predicts the closing price of stocks in the market using NIO stocks data as a case study. So now let's try to understand the problem itself. So there's something we call traditional forecasting. Traditional forecasting is quite inefficient with modern realities. So we have information overload, unknown risks, bad timing over diversification. Bad timing in the sense that you buy a stock at the wrong time and it sinks, then you're losing a lot of money. There's also unpredictability about the market, stock prices. These factors, natural disasters, and political decisions affect stock market prices. Lack of accurate tools, a dearth of solutions required by financial managers and investors to assist in making successful business decisions. So our objective in this project is to allow investors in stocks make losses and gains while trading stocks, but we can help to improve the ratio of gains to losses by building a model using machine learning that helps predict stock market prices and also help them make informed decisions by taking note of indicators in a live chart also. Now let's go to understanding the market. The stock market refers to the collection of markets designated for trading various kinds of securities in a controlled, secured, and managed environment. Controlled, secured, and managed includes the which makes it safer for people bringing in their money to trade stocks. It brings together hundreds of thousands of market participants who wish to buy and sell shares of publicly held companies. For instance, shares of Apple, for instance, we're buying a percentage difference, like 0.001 of Apple stocks, and the more it's like having to be a part of a company and having to gain while they gain. The more they grow, you're going with them. So you get a share of that, and they make profit, you also make profit. So when they make losses, you make losses. It makes you feel involved with the world we are in today. So that is the benefit of the stock market. So who are our target audiences? Our target audience are stock market investors, the competition, which are dark pools, private forums for security trading that pose a challenge to public stock trading as participants save big on transaction fees. So there are also blockchain ventures, cryptocurrency, which poses a threat to the traditional stock market. Both of them can exist on separate environments, but it is also like a threat also, basically, because the way the world is going, even I can see other companies building blockchain devices, building a currency or something, and it also stands out to be a way of investment. And more people might tend to always go through cryptocurrencies the way more we go, but stock is still up there and will continue to be for a long period of time. Now let's talk about the data. So the data we used in this project was gotten from Yahoo Finance API. it is a historical NIO stock data from January 2018 to January 2021. The data contains the following information. We have the timestamp, which is the respective date for each market day, the open prices, the close prices, the low prices, the high prices. And we have the volume, which is the buying and selling, the quantity of stocks sold and bought that day. We have adjusted closing price that amends the stock's closing price to reflect the stock's value after accounting for any corporate actions. Corporate actions occur during the period between the market closing and opening the next day, while other regular traders have closed for the day. Corporate organizations can still trade. So to the market trend, we'll be talking about the downtrend and uptrend on how the market works. Can you go to the next slide, please? Now, what we see here in this slide is the downtrend of NIO stocks in 2019. Downtrend means when a stock crashes and goes in a downward trend. So that means money is being lost and it's losing value. That is a downtrend when something loses value. So at about around February to March, where there was a high in the price of NIO stocks, we could see here that there was a downtrend that occurred and lasted till July of 2020. This is where we as traders have to be careful, because some people are long-term traders. They can wait this out and it goes along and you still make more profit later on in the future. While there are some organizations, imagine an organization going bankrupt and their stock prices will dip and you lose a lot of money, you lose your investments. So these are things, indicators we should watch out for. And when you're looking at a market data, you're looking at a chart, you could always look at it through a moving average, whereby when there is a gold cross or a dead cross, whereby the blue is crossing the orange, you can see the lines in the chart there. There's a blue line, there's an orange line. Whenever the blue crosses the gold one, the gold crosses the blue, it's called downward, it's called a dead cross. While if it crosses it upwardly, it's called a gold cross. So dead cross means a downward trend, while gold cross means an upward trend. So you're either making money or losing money. So an example of an upward trend is what we see right now, which occurred around July of 2020 to January of 2021. So NIO as a stock is a company who what they deal with is electronic vehicles, just as Tesla does. They also build electronic vehicles, and they are a major supplier of China as a republic. So this is how the market works, and to avoid losing money, we have to be careful of the way we look at our market data, our charts, and we have to take note of indicators like a moving average that we see in the charts. I'll be passing on to Khalid as well to talk about the rest.
Good evening, everyone. I'm Khalid Eleke. I'll be taking over for the part of the models we have, the evaluation of the models, and our conclusion. Okay. So the first thing we did was to draw up a correlation for our columns in the data set to see the columns with strong correlations to each other. And as you can see, the close, open, low, and high have high correlation to each other. The volume, stock day, and months have a fair correlation to themselves. Next slide, please. Okay, so for this project, we tested three models. We tried three regression models. That was linear regression model, ridge regression model, and lasso regression model. And as you can see, ridge regression model is a type of linear regression, but it includes an L2 penalty, which is performed least square regularization to ensure predicted values are not so far from the actual values. Linear regression itself is a regression that uses line of best fit to check how highly correlated the variables are to each other. And one of his main advantages is ease of interpretation. It's very easy to interpret. And then we have lasso, which is also another type of linear regression, but it has L1 penalty this time around, which is it minimizes the size of the coefficients to allow the coefficients to go to the value of 0, effectively removing input features from the model. So it's like automatic feature selection for it. So yes, the next slide, please. Okay. So at the end of the day, when we train these models, fit in our data set and we predicted it, then we evaluated them individually. We used the default model score. Then we went for that to use the root mean square error, the RMSE, and we went ahead to use the MAE, the mean absolute error. So at a glance, we can see when it comes to RMSE, linear and ridge are close to each other. In case you are not familiar with RMSE, RMSE works, gives us the equivalent to the standard deviation of the unexplained variance by the model. So usually the lower the value of RMSE, the better the fit. So we have ridge and linear give us a much lower value compared to lasso, which gave us 0.36, linear and ridge gave us 0.32. Then the MAE, the mean absolute error, it makes us understand the average error between our predictions and the observed prices. Also for this, the lower the better, and the value we get is the difference, the cumulative difference between our predicted values and the actual one. So in this case, the lower the better, but in this case, as you can see, 0.17 for ridge and linear means $0.17, since we are predicting in currency, in dollars now. So that means between our predicted models and the actual value is $0.17 was the cumulative difference, which is, if you ask me, very small amount. It's very negligible. But yes, the ridge and linear returned a lower money loss, $0.17 than lasso, which gave us $0.18. So to the next slide, please. So yes, in conclusion, we picked ridge. Ridge will be the model we'll be using in the future, because based on the RMSE and MAE value, so it gave us the best. So we'll be using it for the future predictions. Next, please. So yes, in conclusion, model development. Yes, we'll be deploying the model on this Python open source framework called Streamlit, which converts our Python script into web applications, something similar to Flask, but a little bit better than Flask. Yes, so it works in a way where the users can go there, they will deploy it online, so they can follow the URL, they will go there, they will input the parameters that they want, how many days they want to check, although the number of days the model can take will be limited, but at least you should be able to handle a couple of weeks for them to check ahead. Next, please. Yes, and yes, finally, in conclusion, the stock market predictor uses machine learning for prediction of the stock prices, which will be deploying, like I said earlier. So and it's free and it's open for anyone. Just follow the URL and they can go there and further check ahead what the prices will be according to our algorithm. And I think it's going to be a very useful product for newbies like me, investors and financial managers, people who check the stock market frequently. Because when it comes to stock markets, no information is lost. You need to get as much information as you can get, because the market is really volatile and there's money to be made. Next, please.